Good morning, FFG. This week's episode of FFG TV is going to focus on policy deliveries. Over the next few minutes, I'm going to show you and tell you exactly what I do to make my policy deliveries very successful. I personally think this is the most important part of the process because it gives you an opportunity to go over everything that we've done for the client, re-solidify the sale, develop the relationships so that they know that we're here to help them, and get referrals. I set up my annual reviews all during this process. I think my policy deliveries take usually between maybe 45 minutes to an hour because it's important for me that we go through all of this information. So the first thing I do is when I get the policy in hand from Aviva. Actually, let me back up. When I get notification from Aviva that the policy's been approved, I immediately call the client. I make a big deal of the rating. If I get them preferred or premier, I'm patting them on the back. I'm telling you an awesome job that they did. They're getting rewarded for being very healthy, for good lifestyle choices, whatever you want to come up with. It's just an opportunity to get them really excited about what we're doing for them. I tell them that we'll have the policy in hand probably within the next 4 to 5 days, and at that time I will schedule an appointment to get together with them. But I just want to give them an update that the policy has been approved. Second thing I do is once I get the policy, I pull the pages out that Aviva sends with the policy, and I look at the policy information sheet just to make sure that there aren't any mistakes. I've caught situations where it's been on level versus increasing death benefit. They don't conserve age. They have the wrong premium amount. Just a myriad of things. Wrong address, wrong birthday. This is your opportunity to make sure before you go deliver the policy to the client that it's perfect. The last thing you want to do is go to deliver the policy, get everything sent to Aviva, and then realize that there's a mistake. Now you have to go back to Aviva, get a new policy, call the client, and then go back and deliver it. So learn from me. I've done it both ways. It's a lot easier than initially to figure out and make sure that the policy is perfect before you call the client or before you go deliver the client. So once I get the policy in, I call the client. I schedule the delivery for 24 to 48 hours out, no further. I want to get this thing done, wrapped up, and handled, and move on to the next case. And so I'm immediately calling the client to set up an appointment. The next thing I do is I pull all the pages out that Aviva sends with the policy, and I separate the ones that I'm going to leave with the policy for the client and the ones that I need to have them sign and then send back to fax back to Aviva, just so that I don't forget a signature, so I don't forget information that I need to give them. I don't take the wrong pages back with me. So I'm doing that in my office just so I make sure that the process runs smoothly. The next thing I do is I make a copy of all the illustrations that I want to run for the client. And the illustrations that I normally do, there's 5 of them. So when you're doing the illustration under reports, these are the 5 reports that I do every single time. I do the Life Pro illustration, I do policy expenses, I do policy values, I do policy versus for funds, and I do policies versus qualified plans. Once I get all of the illustrations completed, if you notice on the illustration there's a box that allows you to save them as a PDF file. I will save all 5 of those files on my computer in the clients folder for future references, because one of the things I do on my annual reviews is I pull the policy value illustration to show exactly what the values are going to be at a certain point in time, and then I can compare those to the actual illustration and show the client that it's working exactly the way that we set up. If you don't copy these illustrations initially and Aviva has a change of plans and they no longer offer the particular plan that you set up the client on, you do not have the ability to go back and redo an illustration. The second problem is that if you do the illustration a year from now, the client's birthday has changed, so the illustration will not be accurate. So make sure you're doing this up front so you have accurate records that you can go back and show the client, or go ahead and show the client in the future. You can go back to day one and compare actuals versus projected and show the client that things are working exactly the way that you'd set them up. So now that I've got the illustrations copied and on my computer in the client folder, I will print off the policy versus for funds, and I'm going to include that with the policy packet. So I take the policy, all the information that Viva sends me, and these are the things that I separate out and I bring back to the office. I have the client sign, bring back to the office, because this is what you're going to need to send to Aviva. First of all, you need to send the policy delivery receipt. So one copy of the delivery receipt is for me, and one copy is to be left with the client. So I sign the client copy, and I date it with the date of the delivery, and I include it and I leave it with the client. I take the other copy and I put it in my papers that I'm going to send back to Aviva. Have a client sign, send back to Aviva. The second thing I look for is if there's any amendment forms. If there's an amendment form, don't forget this, because you cannot do a successful delivery unless you have a client sign the amendment. So I'll pull that out, I'll sign it, and again, the reason why I sign it first before I let the client sign it is to make sure they don't sign it in the wrong place. Then the third thing I do is, you'll see Aviva's going to include 2 copies of the basic illustration. This is 18 or 19 pages. I take one copy and I staple it and I sign. There's I think page 10, 11, 9, 10, or 11, depends on how many pages there are, is for us to sign. I will sign that copy, date it, and I will include that in the packet that I leave with the client. The other copy, I sign that page and I date it, and then I have the client sign it and I return that back to Aviva. So now the client has a copy of the delivery receipt that I've signed, a copy of the full illustration that Aviva gives them that I've signed, and I include that with the policy. The problem is that I found is that because Aviva doesn't know when the client's going to stop making their premium payments, when and how much money they're going to take out, we do that on our end. I always want to include a copy of an illustration that I've put together for them that will show they're paying premiums to age 60 or 67. They're going to take out $35,000 in policy loans for retirement supplements, those type of things. So that's why I want to include a policy versus 4 pages, or 4 funds rather, those 4 pages, so that the client can actually see how I put the program together for them. The second thing I'll do is, because for me there's 2 things. There's the target or the initial premium that the client's going to pay, and then there's the max premium. So I'm going to also include an illustration showing them what the max, or how much income they would be able to take out if they max fund their policy. So under the Aviva's Life Pro concept, we want them to get as much money into these policies as possible. So I'm going to help them dream a little bit and show them initial contributions as well as future contributions, and what the effect is on the amount of income loan that they can pull out starting at that particular age. So now I've put everything together, and the last thing I do is I print off a copy of the Life Pro illustration. It's 3 pages, and I include that as the cover page that I'm going to put with the policy. Now the policy is ready for policy delivery. So on the day of the delivery, I go to the client. Let me back up. A couple other things I do is I add a couple sheets about Aviva, because one of the biggest things for me with the client is, why would I choose Aviva for them? And I always tell the clients there's 5 reasons. I've told them this on the second presentation, and then I'm going to reiterate it on the policy delivery. So the 5 reasons I pick Aviva: number 1 is they're the 3rd or 5th largest insurance company in the world. They manage over $550 billion in assets. They're the oldest continuously operating insurance group in the world. They've been around since 1696, 316 years of successful history in the insurance business. The most important thing for them to know, however, is that Aviva has a patent on their indexing concept. So they do a few things that nobody else does. A couple things that they do is that starting in the 11th policy year, at the end of the 10th year, instead of charging the client a fee for money under management, Aviva is actually going to add back a guaranteed 0.6% of their cash value from the 11th year on. That's one of the unique things that Aviva does. Another unique thing that Aviva does is when you go to pull money out through policy loans, they have a variable loan option which allows the client to access their money while having 100% of their money still working for them. And then the third thing is with the wellness benefit, the cost of insurance starts decreasing starting in the 3rd year and every year thereafter, and all they have to do is go to the doctor every 2 years and make sure that their height and weight is in proportion to what it was when they initially took out the policy. So I'm putting in information about Aviva, like why Aviva, why the one that compares Aviva to the top U.S. companies to show how big it is. Just anything positive that you can find. I include a Life Pro brochure from Aviva to talk about them. You know, anything, any piece that you want to include about Aviva, I include in that packet. The other thing that, or in the policy, the other thing I do is I send them articles about why life insurance for retirement, why using an index life, how indexing works, and I'm just including that all as part of the packet that I'm leaving with them. So now when we get together for the actual delivery, I'm presenting them the information that I've put together for them. I go through all the pages, I show them how the policy's set up. I really make it a big deal that if they have any problems, if they want to change anything, that instead of calling Aviva, that they call me, because I want to be the first line of defense on this. If they have a problem making their premium payment, if they have a problem with changing banks or changing beneficiaries, anything that they want to do, I want them to call me. One of the things I show them how to do, though, is I show them how to set up their individual client portals and how to use it. And I tell them that if they need to do little things like changing banks, changing beneficiaries, they can do that right online. But for anything else, I want them to call me. I don't want them to go to Aviva so that I'm the last person to find out that they haven't made their payment in 2 months. I want them to let me know so that we can come up with an alternative strategy to keep this going for them. So a lot of times down the road, clients are going to forget what you tell them. They're going to call Aviva, and then Aviva is going to make changes without contacting us, and it just creates a whole mess of problems. So I want to eliminate that. So I want the client to call me first with any type of change or anything that they need to have happen. So I go through the entire packet. I answer their questions. I talk to them a little bit about, again, why we chose indexing as the way of growing their money. And the fact that it's a fixed account so they can't lose their money, the fact that they're not in the market, that's why Aviva can do this, and the fact that the only thing that's going to change every year is the amount of interest that they're going to earn. They'll never earn less than 0, and they'll earn up to the cap if the market does the cap or more. The other thing I want to explain to them is the 2% guarantee and how Aviva makes that work. It's not a guaranteed 2% a year. It's a guaranteed 10% over 5 years. So every 5 years, Aviva is going to look back and make sure that the client's earned at least 10% over every 5 years. And so I go through the guarantees, that in order for that guaranteed column to come into play, 3 things have to happen. Number 1, the market has to go down every single year. Number 2 is Aviva has to charge the highest cost of insurance. And number 3 is Aviva has to charge the highest expense charge. Those 3 issues have never happened in 316 years. I don't expect them to happen. I show them that I'm illustrating 8.2%. Over the last 25 years, we've averaged between 8 and 9%. So 8.2 is a very conservative estimate. I also show them that even though the current interest rate on the loan is 4.3%, I'm illustrating 6%. Because I want to be very conservative. I want this program 5-10 years from now to be exactly where I illustrate it at the start, so there aren't any surprises. I want this plan to work for them. So then I'm going through the second and why we chose life insurance as the vehicle of choice. They wanted tax-free income, and their 2 choices were Roth IRA and life insurance. And the life insurance worked best because They wanted to control their contributions. They wanted to have a little bit more flexibility on when they pull the money out. They want to be able to make up the difference if in a year they're not able to hit their maximum contributions. They want to have protection against bankruptcies, lawsuits, creditors, Medicaid spend down, all those things. We go through all the benefits, and I make sure they really understand why this was the vehicle that they chose. I didn't choose this for them. They chose it for themselves. Why this is the right vehicle for them to help them accomplish their goals. So after I get everything done, we talk about it. I answer their questions. The next thing I do is I go through all the forms that I've included with the policy, and I make sure they sign the policy delivery receipt. I make sure they sign the amendment form if the amendment form is required, and then I make sure they sign the signature page of the illustration. That entire packet needs to be sent back to Aviva in order for them to check off the policy as being a successfully delivered policy. It's also to protect us as agents, so that if a client comes back 2 years from now and Aviva doesn't have all those forms in the client file, they can actually go back and cancel the policy back retroactive to day one and charge back 100% of the commissions. So protect yourself, make sure you have all the forms filled out, and then submit those all back to Aviva, and make sure that you do that in a very timely manner. For me, it's always 24 to 48 hours, and I make sure that everything is properly done. The other thing that I do at Policy Deliveries, this is another opportunity to talk about referrals. They're happy, they love the income that you're going to provide for them. They're comfortable with how the program works. I take out a sheet of paper and I ask them who to get in their phone book and give me the top 3 names that they know of that I can help. I can give them a call and see if we can sit down and go over what their options are. I don't tell them that I'm going to set them up in the same program. I just want to talk to the friends of my client and know what they're interested in doing, do a full financial needs analysis on them. And I always tell the client, their needs, their desires might be a little bit different than yours. So whatever it is that they need, that's the program that I'm going to set them up in. They may want to do the same one that you're doing. They may want to do something completely different. So I'm going to get them set up in the one that makes the most sense to them. So once I get the names of 3 to 5 people, the next thing I do is I ask them if they would call those 3 people or 5 people and let me know when they've made that phone call. And it's just a simple, listen, I've been working with this guy. I really like some of the ideas that he's shared with me. I don't want to go into too much detail because everybody's different. Just meet with him. I'm going to have him give you a call if it's okay. Just sit down and talk to him. I think he can help you with some of the things and some of the challenges that you've been talking about. That's it. Give me an email, give me a phone call, let me know that you've made that call, and then once you've made that call, then I'm going to make a phone call and set up an appointment to meet with that particular client. Okay, the other thing that I do at this point is, let's assume that you've made a sale on a husband. I talk to him about other opportunities. One of my favorite things is to do children policies. I think every household should have a policy, $50 a month minimum on the child, and I usually structure it so that I'm doing $50 a month on the minimum up to about $200 a month on the maximum, because that gives them an opportunity to put in less now and then add more later. So when the child hits 18 or 21, they're out of school, they're on their own making money, they can start putting $100 to $200 a month away, and their program policy's already been set up for them, and it's been funded by the parents for 5 to 10 years. So they've got some nice cash value in there. I also talk about the benefits of putting something on the other spouse. Why having that amount of insurance is going to be necessary for both of them. We talk about scenarios if we've discussed before about laddering the policy. We're going to start right now with $200 a month, but in a year or 2 years when your car is paid off, we're going to increase it to $400 or $500 a month. So it's important for the client to understand that there's three funding options here. The first is minimum. I don't recommend that a client goes to minimum unless it's an absolute emergency. It's a bailout situation. If they can't do the target premium or the max premium they're doing, it gives them an option to keep making the payments without losing the policy as long as they're doing the minimum. But the minimum isn't going to grow a lot of cash value, and the minimum's not going to allow them access to their money early, and the minimum's not going to do really more than just provide for the cost of insurance and keep the policy in float. I said most people want to focus on at least target and higher, and the closer that we can get to the MEC limit or the maximum contribution, the better they're going to be in as far as the amount of income they're going to get at retirement through their policy loans, or the amount of money that they're able to access in the interim without penalties or taxes if they need it for a business deal or whatever they need the money for in the interim. So I'm making sure that they understand that this is a flexible policy. The people that have the most fun with it are the ones that are using it for the living benefits as well as the death benefit. The problem with most life insurance is that you got to die for somebody to benefit. The nice thing with this policy is if you fund it properly, you have access to your money for the things that you need to use it for between now and retirement, and then still turn it into a retirement plan. So I'm talking to them about all the benefits and making sure they understand how to use this in a way that they're going to be happy with. At this time, we also talk about other ways of funding it. So for instance, if they have old 401ks with their company, and we haven't talked about that, or in the future when they get ready to retire, let's make sure that those rollovers happen. We get them into an index scenario, and then we can use that qualified money to help increase the amount of contributions, the amount of premiums that are going into the IUL. To again, our whole focus, my whole focus with the client is to give them to maximize their retirement income, and also to give them access to their cash before their 60th birthday without penalties or taxes. So the more that we can get in, the more that they can fund the policy, and the quicker they can fund the policy, the sooner they're going to be able to start enjoying some of the benefits. So I definitely want to talk about rollover opportunities with the client. The other thing that I really want to talk about is expectations. I'm not going to see them in most cases for a year, maybe 6 months. So the last thing I do before I leave is I want to talk to them about how I can be the best advisor that I possibly can for them. Do they want to meet once a year? Do they want to meet quarterly? Do they want to meet 6 months? And whatever they want to do, I set them up on that schedule for me to contact them. We either do a phone conversation or we get together in person and go over the things that they want to talk about. One of the things I do reiterate to them is how the interest on these policies work. They're not going to see any movement, any interest for a year. The biggest challenge that I've had with people is that they, especially ones that have had a lot of experience in the market, is they're expecting this thing to move up and down every single month because that's what they're used to. They need to understand that this really works more like a money market account or a CD, in the fact that there is no movement on the account, on their policy, until the interest gets credited. The interest doesn't get credited for 12 months from the month that they put the money in to a year later, but the statement is issued prior to that 13th month when they'll see the interest. So at the end of the first policy year, they're not going to see a lot of interest credited to their account, to their policy. They will start seeing that in the second year. So tell them to be patient. They're not going to see a lot of movement until the second year, and they're going to get a statement once a year when the policy interest gets added to their account. Nothing before. If they want to see how their account's moving between month to month, they need to log on to their client portal and go in and see the changes that are happening to their policy as the premiums are added. But as far as an annual statement goes, they're going to get that once a year, and it's going to have all the information on it. And then at the end of that first year, I'm going to come back and do an annual review with them and go over their statement and show them exactly how it's working and show them how it's working in relationship to the way it was originally set up. So I'm setting up their expectations for the next year. I'm telling them that it's a long-term strategy, so be patient. If they want to see how much interest they're earning, to go to the internet and look at the S&P values on the 11th and the 26th of each month. That's the sweep dates that Aviva uses to calculate interest. And so if they're putting money in on the 26th of August, they can go to the 26th of August and see what the start price is of the S&P, and they can go to the 26th of August a year from now and seeing what the ending price of the S&P is, and the differences between those two is how Aviva figures out how much interest to give them for that 1 year period of time. And they're going to do that September 26th and October 26th and so on and so forth every single month until they have 12 different opportunities to earn interest on the policies. So I make sure that they understand that. I make sure they understand how the wellness rider works, that at the end of the second year they're going to get a statement from Aviva that they need to take to their doctor and have him sign it so that we can start reducing the cost of insurance. So I make sure I talk about that. I make sure that I talk to them about the newsletter that they're going to be getting every quarter from Aviva in the Mayo Clinic. And I show them a copy of mine, so I get them excited about what's going to be coming. And then every time I talk to them, I'm making sure they're receiving their wellness newsletter. To me, that's a big deal. It's a benefit that they get that only costs them $100. In Florida, it's $50, but it's $100 in most places. They charge that over 12 months. It's $833 a month, and they're done. And it's going to save them thousands of dollars in cost of insurance over the life of the policy. I started talking to them about the interest enhancement bonus that I referred to earlier, starting in the end of the 10th year, that based on the size of their cash value, they're going to get a guaranteed 0.6% interest enhancement on top of what the market does. So instead of charging them a 1 or 2% fee like they would be charged in their stocks or mutual funds, they're getting 1% or 0.6% added to their account. So as their account value gets bigger and bigger in the later years, they're earning more interest and they're being rewarded for having that extra money saved inside of their IUL. So these are all the things I'm talking to them about. I want to make sure that they understand that this policy is designed to be overfunded, not underfunded, so that the more they can get in, the more exciting the benefits are going to be. And then finally, I want to make sure they understand that I'm their guy, that if they have any questions, if they want to make any changes, if they want to add things to their policy, if they want to add family members to what they're doing, I'm the one that they need to talk to, not Aviva. I make sure they have all my contact information. I tell them that I'm going to set them up on my monthly newsletter. Aviva sends out a great monthly newsletter, so make sure they're expecting that. I actually do my own newsletter that I sent out to the clients, so I'm letting them know I'm sending them up on that. I put them into my database, so I send them information throughout the year. So for me, it's all about establishing the expectations for them so they know what they can count on from me, what they can count on from Aviva, and that they need to be patient because this wasn't a one-year program. If they just wanted this money available at the end of the year, we would have just done a regular money market account or a CD. But this is an opportunity for them to grow their money tax deferred, and when they get ready to retire, to have access to the retirement supplemental income tax free. And so it's designed to really, I tell people as I close, I said this policy is designed to do 4 different things. Number 1, it's designed to protect your money against market losses. Number 2, it's designed to protect your money against future tax increases. Number 3, it's designed to protect your money against people that want to steal your money. Like if somebody's trying to sue you, or you have to go bankrupt, or creditors are coming after you, the IRS is coming after you. It protects your money against that. And then the last thing is it protects your money against premature death. God forbid something were to happen to you and you were to pass away prematurely, your family, based on the way you have this thing set up, is going to get the life insurance amount transferred to them on a tax-free basis, as well as the money that you've put in. So they're not gonna get penalized for you passing away early and losing the money that you've accumulated in there. They're gonna get both. So anyway, that's how I do my policy deliveries. That's how I do my reviews about Aviva and why we picked Aviva, why we picked the IUL, why we picked the life insurance, why this program is the best program out there to work for them, and that I'm a commitment to them over the years to make sure this policy does in fact work for them the way that I've set it up for them. I don't want them to be disappointed. I want them to be very, very happy. So again, that's how I do my policy reviews. As a last thing, I make sure that I get all the information back to Aviva in a timely manner, so they're happy, and I don't keep getting notifications that the policy wasn't delivered. And then I can kind of put that client to rest for a year or 6 months, and then I have all the information that I need when I get ready to do my annual reviews to provide that the proper information for them based on how we set the policy up. Anyway, guys, I hope this helps. If you have any questions, feel free to call me. Otherwise, make it a great day. Talk to you soon. Bye.